When it comes to borrowing money, you have a few options, but the most popular by far are personal loan or credit cards. Both of them will help you finance your expenses, but which one is best for you? Let's compare and contrast the benefits and drawbacks of both options and help you determine which one is best for your financial situation. If you want to start with the credit cards, with the plethora of credit card companies out there, can quickly become very confusing for people. But in short, credit cards allow you to borrow money up to a certain limit, which you will then need to repay with interest. They do offer convenience and flexibility and even reward programs, which can be a great benefit if you use them responsibly. For example, if you're looking to earn rewards while you're spending, credit cards are a great option for that. Many credit cards offer cashback, points, or miles per every dollar you spend, which will add up over time. And if you know how to use your credit card responsibly and pay your balance off by the end of each month, you can earn rewards without accruing any interest charges or fees. Now, the next benefit of using a credit card is certainly one that I have taken advantage of, which is a credit card can help you build your credit score or credit history, which will make things like taking out a mortgage, a personal loan, a phone contract, or car finance easier, if not a little cheaper. Credit cards can also be very handy when it comes to emergency or unexpected expenses. For example, if your car breaks down, you need to pay for repairs immediately, a credit card will provide you with the funds. And if you manage to pay off the full balance at the end of the month, you won't incur any interest charges, as well as avoid the fees associated with taking out a personal loan. However, if you don't manage to pay it off, interest will jump very high and it's difficult to get out of. And another disadvantage of using credit card is that it's easy to overspend and get into debt. And if you don't have a plan in place to pay off your balance of the credit card in a timely manner, you will end up accumulating a large amount of debt, which could take years to pay off. Now, personal loans, on the other hand, are typically taken on for a specific amount of money that you will pay in fixed installments over a pre-agreed period of time. Now, the amount you can borrow typically depends on your credit history, your credit score, your income, and some other factors. But when will I use a personal loan? Let's say you want to renovate your house and you need to borrow $20,000 to cover the cost. A personal loan would be a better option for you in this case. You can borrow the money you need at the fixed interest rate and pay it over a period of time. This allows you to budget your payments and pay off your loan on time without accruing too much interest. Additionally, since personal loans have a lower interest rates than credit card, you will save money on interest charges over time. Another example where personal loan could be better for you is if you're looking into consolidating your debt. But what do I mean by that? Well, let's say you have multiple credit cards with high balances and interest rates and you are struggling to keep up with the payment. Now, personal loan can help you to consolidate all of your debt into one monthly payment, making it easy to manage your finances and potentially save you money on interest charges. However, there are drawbacks of personal loans as well. Many personal loans will require some sort of collateral, let it be your car, your house, or any other asset that you can put against the amount that you borrow as a security. And if you're unable to make your payments, you could lose your collateral. Additionally, personal loans come with something that is called early repayment fees. If you chose to pay your debt in full earlier than the agreed period, you will be hit with a hefty fee. Therefore, as with any financial decision, it is important to do your research and consider all the factors. And if you're still not sure which option is good for you, it could be helpful to speak with a financial advisor or loan specialist. So which option is better for you? Well, if you want to borrow a large amount of money and pay it off over a period of time, a personal loan might be better for you. If you need flexibility and want to earn rewards but can pay the balance at the end of each month, a credit card might be a better choice. In the end, it really is up to you and your personal financial situation. But just remember to use credit cards and personal loans responsibly and make payments on time to avoid damaging your credit score. Now, if you want to know about other bad money habits that are keeping you poor, click my next video here. And if you want to know whether you should lease, buy, or finance your next new car, click the other video up there. And I will see you people in either one of them. Peace out.